Good morning. This is Jerry Gulke, top producer, Strategic Marketing Services, giving you the update today on the USDA report. Usually September is a critical one because this is where the USDA counts pods, and they count plants, and they count ears and plant population and all that, and bring us a little closer to what we think we know. And this year is maybe a little less valid because we still have some of the growing season left. However, we can't ignore what the government did. And for the most part, in corn first, they did raise the Western Corn Belt yields like everybody thought they were going to be excellent, and they raised them, especially in Iowa, we're at a record yield now, and I think Nebraska maybe as well. Interestingly, they also raised Illinois, which has been the question mark in the whole scheme of things as to what they think they may produce, and they're back to last year's yield. Not a record, but not far from it. So if we don't get a frost, I think the market understands that in these kind of reports where we increase production in August, from July, and from September, and from the previous one in August, that likely we will see increases in production all the way through the January report. In particular, the October one could be the real blockbuster. So we'll look at that one to see whether they want to revise their acres and whether the yield continues to go higher. But for the most part, the market understands what happens. Big crops get bigger. And as we saw a couple of years ago where we mentioned where we had a bull market, we said that each successive crop report will show increases in usage and decreases in carryover, and we got this bull market all the way to $8 in corn and $15 in beans and $20-some in wheat. We're seeing the opposite now because we curbed demand, and we're setting the stage for just about everything to happen exactly right this year. No early frost yet. Certainly by the end of September, it's being advertised there will be one. Northern Plains, possibly into Canada. The market doesn't seem to care anymore because the beans are down 16 cents. They opened higher and crashed. Corn's down 3 as I speak. I think the weather market is over. You can bring on a frost in the last part of September. I would welcome that in northern Illinois because we will hasten the maturity then or drop leaves faster in beans. They are turning today, so pretty much 2 weeks from now, the crop is made in the soybean market. Corn market, you can trim a little in the northern plains, but it's pretty hard we need to get rid of 600 to 100 million to 700 million, maybe perhaps even a billion bushels somehow through crop production reduction, and to get us really excited about seeing $5 corn yet. So now the focus is on what do we do with this big crop and what kind of demand will we have. And going forward from here, I think the government has made some astounding comments. They raised the exports again today, 100 million bushels. They're suggesting that less corn in China, less corn in Argentina is going to be a benefit to the U.S. And they've also, they like to feed this stuff in the United States, which seems questionable in that we have a very low profitability in livestock. So a lot of people are questioning their livestock feeding numbers increasing when we really know we need to decrease not only the cattle herd, but certainly the hog herd some more, another 5 or 6%. And if we do that, that takes away some of the feeding. Unless USDA knows, we will know a lot more come the January 12th when we get the stocks report. That'll tell us how we fared the first 3 months of the year. Certainly a lower corn price, and especially if we can get the September corn to get below $3, that encourages the hog guy to continue because his costs are getting cheaper, and he might get a hedgeable margin further out. So either the USDA is telling us that, boy, the meat demand is going to come back with a vengeance, or that the price of grain and meal and so forth that is fed to these animals are going to get cheap enough that we are going to continue to see deflation in retail meat supplies, milk prices, and so forth that allows us to stay afloat. So a lot of unanswered questions in here, and certainly what it does is makes these livestock guys just wait one more day, one more week, one more month, and allows the bankers to go with them a little bit longer to keep this thing afloat. That's good for us grain producers because maybe it'll be the last half of this marketing year that we see a reduction in feed, and by that time we'll be looking at new acres and new spring planting. But in the short run, we've got a problem. We have too much of everything, just enough soybeans, and in the case of corn, the basis is already bad. In my area, my cash corn for any old crop that's left is the same price as July 2010 for new crop that I'm on to sell for the carry. There is a carry, but there's no reason absolutely to have old crop corn left in the bin. So that should be gone. New crop corn, I guess at these levels, we have crop insurance kicking in. We've gotten calls where a lot of guys don't have insurance. For what reason, I don't know. But when you look at revenue, RA or even CRC, if you have grip, 90% grip, this is the best thing that can happen to you because the prices is falling and we're gaining more than what is really falling. So we're double dipping. We have to put all these things together and say, this isn't going to be a real bad year if you bought the insurance. In soybeans, that's where the risk is. I think this crop could get bigger. I think the government is saying that it's 42.5 now. If we don't get a frost until the second week in October, a killing freeze in the northern plains, then we're going to get, we'll probably see carryover jump to that 300 million level, and that's certainly not $9 beans. So this year's beans, I would certainly, if you're not hedged, get something hedged. I would prefer to hedge them, I think, in the May and then further out because Brazil, that's when they will be selling beans. In the short run, we have to sell and ship about 40 million bushels of beans a week. If anybody buys beans for delivery in the next 3 or 4 months, it is difficult to assume that they could even get them. So that's how big our book is. It's off the charts as far as export sales yet to be shipped. So it's going to be very difficult to get it off of our ports. It's probably going to open up some ideas of our incapacity that we have to sell a big crop. So in the short run, basis should be tight. Let them come to you for the cash beans, but get them hedged off in the further months. And then at some point, if the crop gets big, it doesn't mean every higher. It just may mean that the May and July beans will fall faster than the front months, keeping an inverse in this market. We should develop a carry in the corn. Likely that'll begin after October. So use your grain bins, pick up an extra 30 or 40 cents, and after you've determined your crop revenue, we're down in here now where you could do something wrong easily, and that is cash contract the corn right now at these levels. You certainly won't plant it next spring for that. And then suddenly we find out Monday morning that these weather guys are off by 2 weeks and it's going to freeze on Wednesday or something in North Dakota and in Minnesota and in northern Illinois, and you trim the crop by 300 or 400 million bushels in corn, and we go right straight up, and now you've eliminated any kind of benefit of the crop revenue. So our main concern, I think, is protect that crop revenue that's in place. And if you own the grain, you wait until October and see what kind of average you got, and then go from there. As from the 2010 standpoint, do your cash flows. I wouldn't buy fertilizer yet. I would certainly negotiate rent. I wouldn't buy chemicals. Monsanto said they had a bad year. This stuff should come down more. The further corn drops, the less likely we're going to plant it, and the more likely soybeans will be planted in the place of corn in Argentina and other places in the world. So get something hedged off into 2010 that's over $9. Don't let that slip by. We're 15% sold. I'd be up to 30 to 40% hedged. No more than 15 to 20% cash contracted, however. For more details, AgWeb will be posting my detailed comments on today's report and some of the strategies. If you go to AgWeb, some details in there, exactly what the government did and what it means to us. So beyond that, wheat is a dog. It has been all year. It just now finally come to fruition. If we're going to compete wheat to be a feed grain, then there's a debate going on between corn and wheat, which one can get the cheapest to buy back demand. So if you're planting wheat this fall, I certainly wouldn't sell it. Odds are that we'll see less wheat planted worldwide because of these prices, much of that going to the oilseed industry. And as in most cases, a lot of analysts have a lot of comments and a lot of ideas, just like I do. The market's going to tell us at the end of the day. So how we close this market today will speak volumes on the short-term trade going forward. And so if we would reverse everything and close higher strongly, then that's a whole new ball game. But right now it doesn't look like that's going to happen. So have a good day.